Let's talk about the
Yes.
shilling that's trading at 100 shillings to the dollar. Is this the new threshold for the shilling?
I thought we would start with good news, but clearly you started with the shilling. Yeah, it's been actually regarded as one of the second most performing currencies in the world. But one of the few things in the shilling's advantage is measures being taken to stem the tide and try and reassure both local and foreign investors with regards to trading on the shilling. Although some have opted now to start pricing their products in actually dollars to bring that psychological effect. But you notice with the finance minister's introduction of halving core capital for banks trading in forex from 20 to 10% would in essence try and bring in an element of stabilizing the prices and also removing the element of actually trading in forex, which has been regarded as one of the key things that has put a lot of pressure on the shilling.
I mean, there's quite a few things that have been undertaken in the last week, both on the fiscal and the monetary side. We know of the very aggressive hike in interest rates by 400 basis points a week ago. We're also told that the finance minister has introduced a new threshold in terms of forex exposure from 20% to 10%. What does that mean exactly for those trading in dollars and shillings on the market?
Well, what it's trying to do is to try and bring back, because in the what we call head-to-head battle between the dollar and the shilling is actually coming out worse. So on its corner now, the finance minister has realized that the market forces will not be able to correct itself, because as it is, we operate on a free-to-float kind of exchange rate as opposed to one that is regulated or controlled for that matter. But with the element of the shilling losing out, it would end up having a problem psychologically to the extent where now the currency may reach a point where it's unable to recover, and which will have a knock-on effect, what with the rate of inflation being at 17.32 and rising steadily. So what we can say is that some of these measures have been put in place to correct a slight anomaly on the side of the shilling, but it's not just the only issue, because if you look at the world economy currently with the debt crisis still going on in European Union, it still has a knock-on effect with the few of the foreign investors actually exiting the Nairobi Stock Exchange to look for certain greener pastures, so to speak. There's still that element of the other factors, but at the moment, this is what they've pinpointed and is what they're addressing.
Okay, you mentioned the fact that in a bid to stem their exposure, ordinary traders, the day-to-day shopkeeper is now starting to denominate their retail prices in dollars. So that's obviously going to have a bearing on the consumer. We're also told that very soon petrol prices are increasing. Now inflation is above 17%. What does all of this collectively mean for the average man and woman in the street?
Well, in simple terms, it means difficult times ahead. But with regards to what is happening it's market forces, because with the economy the way it is, with what is happening, but I would say going forward, give another 2 or 3 weeks and a month with the onset, the rains have actually come well on board, and it's actually been raining very heavily. Then we notice there's a lot of the T bonus, which is going to be paid in towards the end of the month. That will more or less try to bring in element circulation of money within the general economy. Right. But to the ordinary consumer, things are still difficult, because yes, certain aspects have to be done. Fuel prices are being adjusted because on one end, we are a net importer of fuel. So with the prices and the volatility again of the shilling, with what is happening in the what we call supply shocks, they tend to be much more expensive when you get the fuel, and that expense is actually loaded onto the consumer.
You mentioned the rains, and certainly that's good news in my books, because we know that the economy has really taken a slump because of the drought that's impacted on food prices. It's definitely impacted on electricity, because it impacts the hydro production of electricity. What else is good news for you?
Well, I would say with regards to that too, with regards to the finance minister's moves to try and stem the inflationary elements in terms of regarding also volatility of the shilling. Then also with regards to this renewed interest, because I believe foreign investors have noticed the NSE sort of is about to bottom out. It's actually right now some of the blue chip stocks are actually at a very, very good premium one can buy in right now, the likes of the Barclays Bank, the likes of Access Kenya. So more or less that also, and Safaricom being one of the most heavily traded in the market. So when we look at it in the long term, because right now, short term things do not look rosy. Everything is actually expensive. The cost of living has actually gone up. But in the long term, because the market can only go low to a certain extent before coming back up. So in the long term, things will turn out to be much better than they are right now.